I'm Charlotte McLeod with investingnews.com, and here today with me is James Henry Anderson, Senior Market Analyst at SD Bullion. Thank you so much for being here. Great to have you.
Charlotte, it's great to be back, always, and it's good to be back. I'm looking forward to this conversation.
Really good to be catching up with you. It's been a while, but I think it's the perfect time to be speaking with you. It's been a historic week for gold and silver, so we're going to jump right into it. I think we can start with gold, and of course we'll move on to silver later, but beginning with gold. So gold had a little bit of a break in terms of price movement over the summer months, and we've seen it break out this week. There's lots of factors driving gold, but what's behind this latest move for you?
Yeah, that's always a great question, because what you end up seeing, like I saw a Bloomberg article explaining what the reasons for gold popping out was. And it just goes back, it reminds me of when I used to talk to some of the old timer traders at the largest bullion trading desk in North America. And they would joke with one another and say, yeah, when we have journalists call us, sometimes we'll say any damn thing to get them off the phone. And the competition is amongst us to see who can get whatever ridiculous quote published in the press. So, the absolute concept of why it's doing this is probably more technical than anything else. The overall trade, inevitably, like you saw the price wedging for 5 months. The question was, were we going to break down or break up? Obviously, we've broken up. I was kind of finger crossed hoping that, it would break down so I could get more gold bullion around 3,000, right? The 200-day moving average is kind of critical in a bullion bull market. At some point, we'll revisit it, but now it looks like we're going to revisit it at a higher level than it once would have been if we'd broken down lower. And that's just inevitable. Like the 200-day kind of stays underneath the price throughout the entire bull market climb. Eventually, it'll go back toward it, even dip below it. And that's when, you get tested in terms of your thesis, whether or not it's still legit. And you have to go back to the fundamentals, the structure, the system, all the reasons why you own it, reconsider that. Has anything changed? And most likely it has not, because we have a lot to go through before it changes. So in the short term, why it's doing that, exactly why it's doing that. The gold market's mostly opaque. You don't really have a full real-time understanding as to what's happening. Price action tells you, it's broken out.
Very true. And so I'm curious in that case to get your thoughts on the Fed. There's been a lot of talk about the gold prices moving because there's expected interest rate coming from the Fed later this month. So are you looking at that? Are you paying attention to what you think could happen there?
Yeah, that definitely helped. I mean, the Jackson Hole situation, they literally just said, yeah, we're ready for some cuts. So you basically have a market where gold is kind of front running. Gold typically will front run things before anything else happens. So that definitely could be one of the reasons why this is happening. It's basically looking ahead and thinking, well, Trump's going to get his way and Jerome Powell's going to move out and some dub's going to come in and they're going to do whatever they got to do yield curve control wise to get the rates to come down. And I'm talking offshore special purpose vehicles, literally printing currency out of thin air, jamming bonds into it, whatever they have to do to get the yield curve down, they will do it.
So that will definitely be one to watch moving forward. So any other factors right now that you're really paying attention to when it comes to gold? We mentioned that there's so many different ones out there, and what are you looking at most closely?
Most closely, when I look at the gold market, I look at right now the bond market has been getting its head handed to it for 5 years. There may be a reversion in this cut cycle for bonds. Okay, bonds probably will outperform for a while, in a cutting cycle, but it won't last. Ultimately, if this is a bullion over bond trade, that's going to go on for decades. Okay, you had a bull market in U.S. bonds from 1980 to 2020, roughly. And so that's 4 decades. Okay, so, common sense says for the next 2 decades, you're going to see bullion crush bonds overall. The other one I'll look at is U.S. stocks, which is super important. Once you get a real shakeout in U.S. stocks and people thinking recession and or fear, the flows into gold will start to come, and then related flows into silver eventually will come as people learn about the beta bet that silver plays, especially once the recession subsides, the inflation kicks on, the emerging markets need more industrial silver, et cetera, et cetera. And then the silver value trade down the line when people are looking at the currency literally burning up in their pockets. It's already pretty commonplace. Like I talk to average people. Like the other day I was sitting just having a little drink with a lady who ran a halfway house shop at a golf course. And, she's just bitching and moaning about the prices of groceries, how they basically doubled in recent time. And this is common. This is everywhere. So we're not that far in terms of the psychology that requires to really break and you get really massive flows and people really afraid of what that currency's value is going to be.
Maybe we talk a little bit more about the stock market. I know you've posted on X about what you see going on there with S&P in a bubble, perhaps going back into parity with gold. So that's pretty interesting. Can you go into what you're seeing there?
Yeah. So the S&P 500 has, obviously been levitated in the last 5 years with all the injections of currency into the system. But when you actually go and look at the underlying mechanics of what and how it operates, right, with passive flows and how absolutely there's only a few stocks that take up a huge portion of the S&P 500. If you have those stocks come down, you'll have a big move in the S&P 500. Now, look, the powers that be are not going to allow. They're going to step in and whatever it takes to try and keep that stock market nominally looking good. They want to keep all the sheeple in that stock market as long as they possibly can, because the insider class, the corporate rich, the executives, they want to get wealthy, and that's generally in the United States how a lot of people get wealthy, is through being the heads of corporations. Okay, as overpaid as those people are, as ridiculous as they rationalize their pay versus the average employee within the companies, that is the country we live in. That is the culture we are in. So you have to keep that in mind. What will end up happening is, if you look at Argentina and or Venezuela and you look at their silly stock markets, they look cool because they're going up nominally at the chart. But in real terms, in gold and silver terms, they are losing big time. And that will be the same way here. You look at the stock market, especially I'm talking 100-year chart. You look at a 100-year chart, you see a pattern that's very obvious. We're on a rollover pattern now at gold. It rolling back nominally to match the S&P 500 1-to-1, meaning let's say 6,500 is the S&P 500. Gold's at 3,500-ish. For gold to go to 6,500 and match the S&P 500 is normal. That is the historic norm in the mid-range of financial history in the United States. It is only the last 20, 30, 40 years that you have cognitively been biased to think that stocks always win. No, they don't. There are times where people eat it by owning stocks. Go back in the 1930s, 1940s. Terrible place to be. Go back. Bonds, similar story. You have secular bears that can last for a long time, and commodities and precious metals can do extremely, extremely well. And I think we're heading into that era. This decade, toward the end of this decade and the next, you're going to have a thing where we're basically the value of real things that we have to have for our modern day, world. They're going to shoot up in terms of relative value versus all these paper assets and all these bubbles that have been super overvalued. You have a situation where gold, just 1-to-1, that's the starting point. We're going to probably go beyond that. Gold will go beyond the S&P 500. And then if you look at silver, the chart's even more ridiculous. It's even more, how would I say? It's even more on steroids, right? Silver, to do a 10-bagger in real value in terms of buying power, the S&P 500, is something that would be completely within the historical norm from here until there. And that's probably in the 2030s when it does that 10x gain against purchasing power in the S&P 500. So I am aggressively, probably overly so, in bullion, and I'm obviously talking my own book, but this is my book. This is my pocket. I keep my eyes on it, and I tell people precisely why I'm doing it, and I show them with data. It's not just simply, me just saying these things. These are real numbers. These are real facts. You can go look them up.
Absolutely. And when you're having these conversations with people, what is the level of interest in gold that you're seeing in the West right now? Because that's been a key question that I've been asking a lot of people about. When does that start to shift toward interest over here?
Yeah. So in the West, just for instance, in my own personal life and my people in my circle, a guy who's been a long-time bond trader who I grew up working for at the golf course, the other day I saw him and he talking to me and he's saying, it's like they've been buying a lot of gold, he's this bond trader. He talks like this, yeah, he's one of the best characters there at the course. But when you hear that guy saying gold is good, it's like you got a bond trader who's saying yeah, he understands why I'm so bullish gold. And so yeah, you have a situation where people who are within those industries fully understand it because they actually spend the time to look it up. But the average investor still, they're still in delusion land. They still think that what the number on the screen, 6,500 S&P 500, is true wealth, and it won't ever disappear in real value terms. But I'm suggesting, that's inevitable. It's going to happen. You're going to have gold chase back to match it, and then beyond it in time.
I'm curious what you see coming from central banks. So we know central bank buying has been very supportive for the gold price. As the price continues to rise, do they keep buying at these levels, or what do you think is coming?
if you had a currency creator desk over there, and you had all these different fiat currencies sitting over there, and you had all these bonds that they could freeze at any moment in time, and you were in an emerging market, and you were in a situation where maybe you're not in the best light or thought of in terms of the United States and or the Western hemisphere, you might think twice. And that's precisely why the emerging market is the leader in this record-sized gold bullion buying. I'm talking larger than anything that's ever been done in history, even more so World War II and to now. So that's year after year after year they've been doing it. And this is only what we can figure out. Like, you know, they declare a certain percentage. There's a small section where we go to the OTC markets and people make estimates, but they always forget that literally from 2008 to like 2020, they weren't there. They weren't doing the estimates, but there was massive amounts of gold that moved out to the east, especially China. So the concept that China doesn't have multiples of what they publicly claim. I'm talking multiples. The only question is, you know, when they're going to declare it, why, according to their agenda. But at some point, they're going to come out and they'll probably end up having larger official gold reserves than anyone in the world.
Wow. And so I would think that all the BRICS are tied up in all of this as well. So when you're looking at this, how are you fitting the BRICS and kind of the growing dominance there of the BRICS into this picture?
Well, it's an important thing. I mean, they're going to keep growing. If you look out in the world and you think 10, 20 years down the line, I mean, the Silk Road is going to develop a lot. That whole area of the world has a lot of room for growth, and it has a lot of smart people, and it has a lot of people who want to play and work on the same page. So they actually start making real returns on the things that they're pulling out of the ground, you know, in terms of commodities and or energy, et cetera, et cetera. And so, you know, in a commodity bull market, those people are going to inherit a lot of real value gains. That's just inevitable. And these are landlocked countries. They don't have to go overseas all the time. So they can, you know, they can rule one of the, you know, the largest landmass together. You know, if they trade well and in balance, they can rule for a very long time. So to me, that concept that BRICS are going to, like, you know, subvert the dominance of the US dollar, that's nonsense. That's like clickbait headlines. But on the long term, you know, when you get the emerging markets working together, trading together, literally using new technologies where they can trade currencies without the US dollar as intermediary. That is dollar bearish. There will be no dollars between their trading. That is not good for the US dollar's long-term purchasing power.
Yeah, I think it's really important to look at the big picture there. And so you were mentioning at the beginning of this conversation, we were at a point where gold was either going to break up or down, and we've seen it go up. So I'm wondering, when you look at the price right now, where do you see support and resistance levels for gold at the moment?
Yeah, so right now, let me just pull the chart up so I'm not speaking out of turn here. You got a pop that's blown beyond the 3,500. 3,500 will be the bottom. You know, if it dips below that, then maybe we'll have a little bit of time, you know, going down and retesting some stuff. But 3,500 is super key. Stay above that. See if we can clear 3,600 soon, you know, in terms of spot price. Obviously, people love to show futures prices, but remember, spot price is king. That's what really matters. And then, you know, on the down, like the 200-day, if it stays up here for a while, the 200-day will keep rising. I haven't looked at the 200-day lately, but it's probably well over 3,000, maybe 3,030 or so, 3,040. It keeps climbing. Like I said, you know, if you're in this market looking to get some gold bullion, you know, you could, if you have a position already, then you can just basically wait it out. If you don't have a position already, then you better start. You know, that you start onesie twosie, kind of dollar cost average in and start building a position. And the same goes with silver. You know, it's basically, the fact on a relative basis that they're so cheap versus the stock market and fiat currencies or virtually every other thing you can name on a long-term chart is why you definitely need to have, an aggressive position in gold and silver. I mean, I would argue 20% of your liquid net worth needs to be allocated to bullion at this time.
Yeah. Well, that answers one of the questions I was going to ask you, which is, of course, how much gold and silver should you own? So it's at that 20% level at this time.
Yeah. So let's say I have, my own private business. I'm not talking about that. It's not your enterprise. Keep that out. I'm not talking about your residence. I'm talking about your liquid net worth. Say you have $1 million, mixed amongst stocks, bonds, et cetera, et cetera. Well, 200,000 of that needs to be allocated into physical bullion that you own outright, privately, outside of this system, in case the worst comes to pass. And, you give me some time, I could paint some really ugly things. But, let's hope that for the best. but let's prepare for the worst. And that 20% allocation in that situation is going to do very well, where the other 80% may not do so good.
And how would you split that between gold and silver?
That's a personal question. It depends on your age, right? Like I'm 45 years old. I got time, so I'm aggressively positioned in silver. But I do own some gold. I do own some platinum. Now, if I were 65, I would probably have much more in gold, right? I would have, depending on my health and longevity feelings and my, whoever my children were and what they're like, these are all things to consider. But gold is nice when you get larger sizes because it's very tiny, easy to hide, easy to, it's super small. I mean, I literally $200,000 in gold I can hold in my hand. It's nothing. I mean, it's so easy to keep discreetly. Silver, a little bit different. 200,000, I'd be sitting on a couple stacks of silver here, literally. So it's a little bit bigger, a little more cumbersome. So it's a younger man's metal, whereas gold is the older person's holding because it's less volatile. And what you want is less volatility as you get older, whereas silver is going to be a wild ride. Platinum too, I would consider platinum bullion. I think on the long haul is very cheap versus gold on a long-term chart. And at some point in my life, gold and platinum are going to meet again, and platinum is going to probably go beyond gold, I think. So it's a long wait. It may take 10, 20 years before that happens, but it will happen again. It's happened before. That's how financial history works.
Yeah, we see the same kind of repeating cycles. So when people are looking at these physical bullion products, I'm wondering, I always like to ask you this question, where are you seeing the best value right now in terms of gold and silver products?
So right now, the premiums on American Silver Eagles, and I'm going to speak on a United States perspective, because that's where I am and that's where most of our customer base is, and that's where the majority silver bullion buyer in the world is. The American Silver Eagle is, I still think, the best. If you can get them around $3 over spot for the long haul, that's a good bet. I wouldn't go all in on just Silver Eagles. There's other options, but I definitely would keep a large allocation to Silver Eagles because there's times where they go into premium and you can arbitrage with them by when they say, or, during the COVID era, they went $10, $20 over spot. Well, selling them back to dealers and then getting them into generic and converting into generic ounces from there, in like 100-ounce bars or 1-ounce rounds or what have you, you had the ability to increase your ounces with like no risk. Like as long as your counterparties are solid and you know them, you literally could increase your weight by 40% at such a trade. And it's literally like you sell, you buy. There's no, it happens very, very quickly. So Silver Eagles to me, 90% silver. If you're a US citizen, junk silver, I think is a really nice purchase because you can get it now at spot and or below spot, depending on where you are. We have a situation where there's so little retail appetite at some moments where 90% silver still ends up getting sent off to refineries and melted. So they're not making any more of those. And I would suggest 2 or 3 generations from now, those will be collector's items. So for me, 90% is something I probably pass down. Silver Eagles is something I use to arbitrage and flip to get more OZ. And Silver Eagles, there is no doubt in a real squeeze, they're the #1 product. They are in the United States. People just spill that all over them. They love them.
Very helpful. And so in the past, we have had situations where it gets harder for people to actually get their hands on physical gold and silver. Do you see a point in the future as prices rise where we see that happen again?
So the points when that happens is fear driven. Okay. So if you get a situation where Black Swan creates some type of liquidity crisis and you have a paring down, like literally like everybody wants their capital back situation, well, that's when bullion goes off the shelf. In the United States, there may be about 5 billion of like liquid, like bullion on shelves ready to be sold by dealers. If you add it all up, it's not much. It really is not much. So you get a push, an impetus, like the Silicon Valley Bank situation, like that drove record sales throughout the United States. You had you had banks, bank runs happening. About 4 or 5 of them, had to shut down and or rejigger themselves. And you had a real fear and the banking system was going to go under. You get something like that and immediately all the stuff on the shelves goes gone. The premiums jack out and then you have these long delivery delay times. You don't want to get caught in that situation. You want to get ahead of that. And this has happened multiple times in my career. It's going to happen again. It's inevitable. I saw it in 2008, saw it in 2023. I've seen it in other spurts and starts and during COVID. It's going to happen again. So that's inevitable.
Right. So we need to be prepared before that happens again. And so we've been talking a lot about gold. Let's move over to silver and look at what's going on with the price, because of course it's an exciting week for silver as well. We saw it get past $40 per ounce since, I think, the first time since 2011. So I'll ask you the same question I asked for gold. So we know underlying drivers for silver. What is it that's pushing it this time right now?
So, right now you have a spot gold silver ratio at 87, which is historically very, very high. But you have a situation for silver where the industrial demand is more than anyone ever thought was coming on in the last 5 years. It's been relentless, and it's grown so much now that you have annual deficits that are becoming commonplace in headlines. So what you're ending up having is people who are seeing this, and higher net worth investors are starting to move in and allocate into silver. So it's bringing along combination pressure between industrial demand and the fact that you're going to start having people betting on it in terms of short to medium term trading to try and make beta over gold. They want to see, if gold's going to do well, silver's going to do better. That's how they see it. And so that's what's happening a lot of. And you also see some of the miners doing well. So the entire complex, right? I'm talking from not just the bullion markets. Right now, the retail market's a little slow. But in terms of the actual places where the price discovery mechanics are happening, you have a lot of people coming on. Momentum traders are starting to come on, and they're starting to see silver running from 40 to 50 and having a battle for 50, and who knows what after that. But this is the era where you're going to see a lot more trading, and not just in the COMEX, but also over in China, the Shanghai Futures Exchange. You're going to see it in a lot of different places, and you're going to see, China. If you look out far enough, you would expect that in China, there'll probably be a ring of people, a ring of really wealthy guys who are going to go long in silver. And there's probably going to be, all these allegations of new Chinese Hunt brother types, that's probably inevitable as time goes forward.
Right. And you're mentioning that $50 level, which of course everybody likes to look toward for silver. And a lot of the time in the past, I've heard, okay, if silver gets past 40, then it's a relatively easy path to 50. So I'm wondering how you see it. I know prices are hard to predict, but what are you thinking?
I mean, there's people in the industry who I respect who are saying 50 could happen this year. And these aren't just like random dudes on Twitter. These are guys who've been trading, in the COMEX since gold became tradable on the COMEX since 1975. I respect these folks and their and the methodology they use to come up with such a bold public claim. Whether or not it happens this year and or next year and or 2027, the only thing that can kind of get in the way would be a deflationary, collapse type of situation where, you get a 2008 type deflation that comes and crushes the system and spot prices start falling. The one thing that does occur, what will end up happening is you have a bifurcation. Bullion will stay up here and the spot price might stay here, right? So your downside in bullion is very limited. It's an asymmetric bet in the sense that it has multiples to the up and it has very little limited down at these levels. And given the situation we're in. The fact is, whether or not it happens now, 50 this year or next year or the next, it's like a psychological number. It really means absolutely nothing in terms of, what did $50 buy you in 1980 in terms of real world goods and services versus what $50 in 2011 even bought you in real world goods and services versus today. Now, if you use like the rigged inflation data that the government has been rigging ever since 1980, ever since the last time gold and silver almost crushed the entire system, well, it's like silver should be triple digits just based on their own rigged data looking backwards. So if you actually use more of a free market 1980 approach to doing it, the silver price gets absolutely ridiculous. I would sound crazy if I started spitting those numbers. So the concept of silver hitting triple digits, even by the end of this decade, but certainly in next, in terms of the nominal fiat dollar price, is a no-brainer to me. You can see it; it's coming. Ultimately, the question is not really the nominal price; it's what it will buy you in real-world goods and services. How much of a median house can it get you in terms of ounces? How much of the S&P 500 can it get you? I mean, you have to base it, you have to measure it based on like the most important asset classes, the largest ones with the biggest data sets to get a feel for what is undervalued, fair valued, and or overvalued. Because at some point, we're going to get toward fair value, and then at some point, we're going to get into overvalued. And by the time we get into overvalued, I'm not going to be here talking and pumping silver. I can guarantee you that. So that'll be a different era.
I think that's a really fair assessment. And in terms of the silver price, so we've talked in the past about precious metals price manipulation, especially when it comes to silver. And so when we see the price moving like this, what does that tell us about manipulation? Is the grasp becoming less? What is going on here?
So the manipulation that we constantly saw in the 2010s was more obvious and more apparent. There's always a short side that wants to induce, sell-offs. There's always a long side that wants to make the price go higher. Whether or not they're conspiring at what times of the day, some of these trades, they look a little bit artificial. That's one thing. Like, a lot of people will spend hours and hours talking about this, and in the end, it's like it's a lot of egos just battling over points that no one can prove, right? And so you have a situation where I believe that we have systemically suppressed gold and silver prices based on the system, based on the fact that derivatives ultimately, for the most part, are the things that discover price week to week, day to day, year to year. And that has been the case for a long time. In the derivative markets, in terms of the size of them compared to the actual physical markets, it's just ridiculous. The fact is that you basically have to have systemically suppressed gold and silver prices in order to have full fiat currency cartels that we have had for 55 years running. And, the bond market is starting to illustrate that that's kind of unraveling. But the bond market, that is what kind of kept everything in check. But if that starts to unravel, you have a situation where gold and silver remunerate, revalue. They start showing you exactly what they are. They are money much better than any of these dumb fiat currencies we've ever used. These fiat currencies were ultimately founded on being originally a weight of gold and silver. And now the reversal of that is going to recount in terms of real value. Gold and silver are going to attract a ton more value as these things come undone and unravel.
Thanks for going into that one. I think it's important to cover, very tricky, but important to go over. And in silver, you had mentioned before we turned the camera on, you had some current events that you wanted to take a look at here. So I'll turn it over to you, and we can go over what you're seeing there today.
Sure. So there was an email I got this morning, and I figured it was inevitable. The LBMA publishes their data for London Gold Fix and London Silver Fix price data. And they published it, and they've had it on their website for a long time. And, in this industry where people don't have huge, net worths, they're just running websites kind of like a mom and pop. You have people who will simply scrape that data and then use it for charts, et cetera. So one of my colleagues in this industry, one of the best, Nick Lard out of Australia, got an email this morning, basically, and more or less, wasn't necessarily threatening them, but it was basically saying, hey, buddy, you got to take that data down and or join our club and pay $50,000 a year or whatever it costs to get their private data. I'm sure it's something, ridiculous. Only banks can afford and then institutions. So basically, they're just threatening them to say, like, look, you can't use our data any longer, so take it off. And that's the problem. The problem being is that data is uber critical to understand where we have been and to understand how they have suppressed the market. You can take that data and you can look at various charts that illustrate that the Western world has been using the price fixing schemes that they had for decades and decades, and or the COMEX system or the other levered, London trading markets, the local London, et cetera, whatever, all the different names they have there. You can use that data and you can see how the Eastern world has bifurcated, has run away in terms of price discovery versus the Western world. And so you have a situation where they totally have gone to two different directions. And on the silver chart, for instance, like the silver chart is the one that I key on a lot for silver. It literally, you have a situation where I can tell you the data. In 1970, the chart starts at $1.92 and a half cent an ounce, right? $1.92 an ounce. Okay, so it runs for 55 years. You have spot now at $40.70 some odd cents on the chart. So for the last 55 years, it's run from $1.92 to 20 cents an ounce in New York trading hours, in COMEX hours. So it's just simply gone downward in a multiple of almost, tenfold downwards. Whereas the Eastern side, it's now at $387.31 an ounce, right? So this huge bifurcation I'm talking about on this chart, there are 4 times in silver full fiat currency era history where the blue and the red line have met, reconverged. There will be a 5th time, and it will be in triple digit landia. So that is the point. I mean, the point is I think LBMA really, personally, I think they're embarrassed by the fact that they're literally getting, more or less shown throughout the world, like, hey, like, look at this market that pretends to be, so functional, but look at the data. Like, don't listen to the words, just look at the data and see how their system has more or less given, like Russia, literally Russia, it gets over on this fact. Like Russia saw that this was happening in the mid 2000s. They went out and they had a policy to essentially move about 30% of their sovereign wealth into gold bullion. And then they went into war and they had that gold bullion pile, thanks to this rigging of the price for the last, 20 years or so. And now everyone looks around and thinks, well, how is Russia so powerful? Well, it's because you jacked with the price. You basically had all these London traders making their bonuses, so now we're in a situation where we're great. Nice job. You corroded our entire Western world. And you have a situation where Russia, China, etc., are now converging. They have massive power, massive hoards of gold. It was a judo move, essentially. And the reason why is so people who trade on these derivative desks can make their quarterly bonuses. That's essentially what it is. And the people down in emerging markets who mine this stuff out of the ground, who cares about them? I want my bonus. That's how these people think.
Well, I think this really shows how much is going on behind the scenes that the average person, even if you're following gold and silver, you might not know about this. So do you have any advice for people on how they can keep track of some of these more behind the scenes movements?
So every week on SD Bullion's YouTube channel, I publish a SD Bullion's weekly market update. It's generally like a 10 to 20 minute video. You might be overwhelmed if you first showed up and you don't really know much about the market. But once you kind of start to understand the verbiage, the lexicon, what's going on, if you're a left-brained, if you like data, if you like to see charts, et cetera, you'll probably end up enjoying it. I try and make it somewhat sarcastic and somewhat darkly humor. We have a little bit of fun in it. It's not super politicized. I try and keep it really down the barrel with gold and silver related. And so, yeah, I would say come to the SD Bullion YouTube channel, check out the weekly bullion market update. You can come on my Twitter feed, check that out. And there's all types of resources. Just reach out to me on Twitter if you're a newbie and you have no clues. Just I answer virtually anybody that asks me things, unless it's a bot, and then I just kick them to the side. But normal people, if they come to me and respectfully ask questions, I'll point them in the right direction.
Well, I'll link to your channel in the video description. I always enjoy the weekly updates that you do. I think they're a pretty fun watch. So encourage people to check that out as well. And a little bit more on silver. The other point I wanted to mention to you. So a week ago, maybe a couple weeks ago at this point, we had silver added to that draft critical minerals list in the US. So I wanted to get your take on that. It sounds like it's not quite official yet, but heading in that direction. Do you think it will come to pass? Will other countries follow the lead there? Is this important? Any thoughts?
It is important. I mean, for a long time, platinum has always been considered a critical metal because of military, et cetera, right? It's super key for any type of, jets or things that military use. Whereas silver is super key too for the military. And so you've got to have it for nuclear power. You've got to have it for virtually anything that's big in terms of scale industrially. You've got to have silver. So the concept that it's finally being admitted that, yes, it's a critical mineral and yes, we have to have it. I mean, that's a fact. In the United States, we use, we have to import literally 6 times the amount that we actually mine per year. So the amount that we have to mine, like we only mine a certain amount, like the fact is we use 5 to 6 times, internally for production, for different things industrially, or for investors who buy it in bullion form. We have to get 5 to 6 times what we actually mine in our own land of silver. So we have to have it. And the only way that you're ever going to get bullion stackers to turn around and actually sell their silver is you have multiples of spot price. So, if you want to keep the spot price at these artificially rigged levels, then it's fine. You're going to keep having deficits. And at some point, you're going to start running into walls. But if you allow, I'm sure in a controlled manner, but if you allow silver to go back toward where it relatively should be in terms of reality, it should be triple digits. Then you'll actually start seeing some flows, and it's not, there will be stackers who will be moving out of silver at a triple digit level per ounce for sure. So there will be recycling that will occur. But, on the long-term scale, if you look out, decades and decades, we have to have silver. We've got to have it. It's just a fact. And so mining is going to probably become much more important, especially in South America. China's already there. They're already front running everyone. They're already down there, setting up deals, shipping the metal off to Chinese refineries directly from South America. That's where the most proven reserves are. And so, yeah, I mean, it's just inevitable that silver is just, we have to have it. We can't have this conversation today without it. It's one of those elements that you just have to have. And there's a limited supply. That's just the way it is.
Yeah, and well, I think that's how they would define a critical mineral. So it does sound like it makes a lot of sense. Okay, as we're getting to the end here, I remember when we talked last time, you were saying that this was going to be a bullion bull market first, and then, maybe later down the line, we'd see the mining stocks participate. And it seems like we're getting to that point right now. So I'm just wondering, before I let you go, any comments on the mining equities that you would make at this point in the cycle?
So generally, the mining equities, the majors start to move first, and the mid-tiers maybe will get a little bit of action. The juniors, not until much later in the mania phase. The juniors, by the time gold and silver go in their mania phase, you're going to get every scoundrel, every type of crooked person you ever saw in the cryptocurrency market. They're going to show up and be pumping juniors constantly. So expect that. That's coming. But ultimately, what I believe is that this is a quadratic winner. We're going through a restructuring of the system. And so first and foremost, I want my capital in my hand. And I'm not so concerned about the return of capital. And miners are risky. And if you look at a long-term chart from 2007 until now, bullion has handily outperformed miners over that time frame for the most part. There's a couple blips where miners do okay. And I think we're going through a blip right now where miners are doing okay. But you have a system, you have a situation where you have the structure of the system, nations, they're going to, like everything is up for grabs, right? And you have a situation too where inhabitants of these countries who work in those places and who know that they have proven reserves like that, they're going to start shutting things down. I mean, they're not going to put up with it if they're not making enough money. So, and then as well, governments always will start nationalizing, et cetera, et cetera. So you just have to be jurisdictionally very, very respectful of what you're doing, and allocation-wise, you have to be very smart about it. This is not a lucky lottery ticket. Do not go out there and throw up like 12 juniors and think that that's going to be, your mix to like ride the bull market. That is an absolute clown show idea of how this is working. What you should do is get a very foundational, strong position in bullion. And if you want to speculate in miners, do it. But just know that you can and will get jacked. I got jacked once, and I had a good position Russian miner, and when Ukraine happened, OFAC froze it, still frozen. So from that moment on, I just thought, that's more or less the universe telling me I'll play with miners maybe later on. But right now, I am bullion focused because right now we're going through a destruction phase, and in the destruction phase, you want bullion.
Makes total sense and gives a really good idea of where your focus is right now. So I will let you go unless you had any final thoughts on the markets, or if you want to I guess we already mentioned where to find you, but if you want to go over that again.
So the one thing I would suggest people remember is that right now, coffee, for instance, in the commodity market is in backwardation. And so what that means is that there's limited amounts of coffee in warehouses, right? And so the cash price is much more expensive. I'm talking the price right now over the table from big bags of coffee is over the price of the futures. I don't care what future it is, it's underpriced what the spot is, right? So it's in full backwardation. At some point, I'm suggesting that silver likely will go into full backwardation and maybe even gold. I don't think gold has been, but if you see a situation where silver is in backwardation, it is going to go straight up, it's going up. I mean, that it happened multiple times in the 2000s, and that's where many of the major silver bull markets occurred. And it's not even close to happening yet right now. But in the future, learn what backwardation is, monitor it. If you get a full silver backwardation, that is literally like alarm bells ringing. And if gold happens, look out, Jack, something really wrong is happening.
Okay, well, that is where we'll wrap it up for today. This was really good. I think you left me with a good understanding of where we're at for gold and silver. So thank you very much for coming on to talk today.
All right, thanks, Charlotte. It's always good talking with you.
Of course. Once again, I'm Charlotte McLeod with investingnews.com, and this is James Henry Anderson with SD Bullion.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.